Welcome to Accounting with Madam Mombi. Today we are going to look at variance analysis. So we are going to start by defining what is a variance. So what is a variance? A variance results from standard costing. Any variance is a difference between the standard of the predetermined versus the actual. So if it is a cost variance, it is simply the difference between the standard costs, that is a predetermined cost of an activity, and the actual costs that is incurred. If it is a revenue variance, in terms of like how much was the expected revenue vis-a-vis how much is the actual revenue. So variance is simply the difference between the forecasted, or what you have said, the standard or the predetermined, against the actual amount. That is the definition of a variance. So what is variance analysis? Variance analysis is a breakdown of these variances into their constituent parts. So most of the variances relate to two items. They relate to price and quantity. And we are going to be looking at that in our computations as we proceed. So for today's class, we are going to look at direct material variances. The bigger, broader category is direct material cost variance. When you talk about direct material is material that is used in production and varies proportionately with the level of output. So when I say direct material cost variance, it is the difference between how much material costs an organization was expecting to use for production, the difference between that with the actual material costs that they are going to have incurred at the end of production. I repeat, the total material cost, when you talk about cost variance, it is the difference between how much direct material was budgeted or was planned or was estimated, forecasted as the material cost for the production. You compare that with the actual cost of materials that was paid for the materials. So you want to see what is the variance. We are going to be basing it on the actual production. So we are going to say that for this, the actual, I think something is missing, the actual production, you multiply by the standard material cost. Actual production, you multiply by the standard material cost. Then you less the actual material cost. So this is just one of the formulas that we can use to get the direct material cost variance. Alternatively, we can break down this variance into two. We can break it down into the material price variance and the material usage variance. So for example, you are planning to use a certain cost for materials and you have used a certain cost for materials. The reason why there is a difference or a variance would be as a result of the price. Maybe you bought the materials at a higher price than what you are expecting. Or it could also be as a result of usage. Maybe you used more materials than what you had estimated or what you had expected. So we are saying the cost variance for material can be broken down into the price variance and the usage variance. And as I have said, it could be as a result that the planned price at which you intended to buy your raw materials, either the price now is bigger or the price is lesser. It could also be as a result of usage, where the material you had estimated to use in terms of the standard material for your production is less or is more than the actual material that you used in terms of usage. So these two variances, when added, are going to give you the material cost variance. Now we may explore some of the reasons why this is possible. For price variance, you may have some discounts sometimes, so the price may end up being less. For price again, you may also have there may be also inflation, so that the price ends up being more than you had expected. For the usage variance, there will be inefficiencies in production. You end up using more material than you had expected. Or there would also be efficiency in production. You end up using less material than you had expected. So those are just but part of the reasons as to why you have a price variance or a usage variance. So looking at the formula, when you talk about price variance, as we have said, all variances are a difference between the standard and the actual. So if it is a price variance, it is going to be standard price minus actual price. The price you intended to buy at and the actual price you have bought at, you multiply that with the actual quantity that you have purchased. So if you are planning to buy something at 10 shillings and you end up buying at 12 shillings, there's a variance of 2 shillings for every item you buy. Then you multiply by the number of units that you have bought. So if you have bought 100 units, then the variance is going to be 2 multiplied by 100, which the variance is going to be 2000 unfavorable. So again, when you come to usage variance, we have said all variances are a difference between the standard and the actual. So here, the difference is going to be standard material that should be used for the actual production. This is important, what you have written in bracket. You have to remember that it is for the actual production against the actual material that was used. But now, when we come to usage variance, we hold the price to be constant. We hold the price to be constant. So we usually use the standard price. We do not use the actual price because we want to differentiate the effect of price and quantity. So when you come to the quantity variances or usage variances, we hold price to be constant, so we multiply by the standard price. This is an explanation of these two formulas, but to understand them better, we would be able to do that by looking at a question. So we have a question here, an illustration. It says that Bimo Limited produces a powder soap for household use. The standard cost for producing 1 carton of the soap is given below. So for you to produce 1 carton of the soap, you're going to require these raw materials. There are 2 of them. You're going to require, for 1 carton, you require 15 kgs of tallow. Tallow is the raw material. And you're being told that tallow costs shillings 10 per kg. Then for caustic soda, you are required to use 10 kgs of caustic soda. Again, that's the second raw material. And caustic soda costs shillings 16 per kg. So here you have 2 items. You have the standard quantity. This is the standard quantity. Every carton of the household soap requires 15 kgs of tallow, that is the standard usage, and requires 10 kgs of caustic soda, that is the standard usage. Then these are the standard prices. The price of tallow is shillings 10 per kg, and the price of caustic soda is shillings 16 per kg. Those are the standard prices. Now, we are going to evaluate a scenario whereby what happened for a certain period. So in the month of October 2023, there were 1,200 cartons were produced. So in the month of October, 1,200 cartons were actually produced and sold, and the following raw materials were purchased and used. The raw materials that were purchased and used are as follows. For tallow, they purchased 10,800 kgs and used all that material at a cost. This is the total cost. This is not per unit cost as compared to this. This was per kg. This is the total cost for these kgs. So they bought all these units of tallow, 10,800 kgs at shillings 129,600. And they also used all that material. Caustic soda, they bought 13,200 kgs at shillings 198,000, and again they used all that material. So what are we required to do? We are required to compute the material price variance, to compute the material usage variance, and to compute the material cost variance. And that is what we are going to do. So you may take a minute to look at the question as we turn to the board. So we are going to compute from that information. I am going to briefly summarize the information here that we have said. You are going to require from basic raw materials, you are going to require tallow, and you're going to require caustic soda. And we have seen that you require 15 kgs of tallow at shillings 10 and 10 kgs of caustic soda at shillings 16. So you require tallow and 15 kgs and caustic soda 10 kgs. We have been told the actual. They have used tallow and caustic soda. We can shorten that. They have used 10,800 kgs. And they have also used caustic soda 13,200 kgs. Then you are given the standard price. The standard price of this, it was at shillings 10 per kg. And for caustic soda, it was given at shillings 16 per kg. Again, with the totals here, this costed shillings 129,600, while this costed shillings 198,000. So the first thing we are going to get is to try and get the actual price per unit. Because as I'm saying, this amount of money was spent for these kgs. So what is per unit? Actual price. Actual price per unit. Actual price per unit. We want to compute here what is the actual price per unit. So what is the actual price per unit? We are going to divide. So we are going to divide 129,600 divided by 10,800. We get the actual price of tallow per unit. So I'm saying you are going to divide 129,600 divided by 10,800. This is going to give you 12 shillings per kg. Then for caustic soda, they used 198,000, so you're going to divide 198,000 divided by 13,200 kgs, and it is going to give you 15 shillings, 15 per kg. So those are the actual prices. These are the per unit actual prices. And I want you to compare those with the standard. That is what we want to compare. So we are going to compute and say that our first variance is the material price variance. It is given by, we have said all variances are difference between the standard and the actual. So it is going to be standard price minus actual price. The standard price minus the actual price multiplied by the actual quantity purchased. Multiplied by actual quantity purchased. So for tallow, we have tallow and we also have caustic soda. Allow me to use those initials. For tallow, the standard price, you are told they were expecting to buy at 10 shillings per kg. That was the standard price. So for tallow, the standard price is 10. For caustic soda, the standard price is 16. They were expecting to buy at shillings 16 per kg. Then at what price did they actually buy? When they went to the market and bought these items, We have seen the actual price when we divided the total cost or the money they spent against the number of kgs bought. We have seen that the actual price per kg was 12 shillings. At the market, the actual price was 12 shillings. And the actual price for caustic soda was 15 shillings per kg. So we can see how the variance is coming up. This is the standard price that we expected or planned. This is the actual price. Now, so there's a variance of 2 shillings for every item that we buy, for every kg that we buy. So we multiply by the number of kgs that were bought, which is given here. These are the total number of kgs that we bought. We bought 10,800 kgs of tallow, and we bought 13,200 kgs of caustic soda. So the material price variance for tallow, we have seen that the standard price is 10 and the actual price was 12. Multiplied by the number of units or the number of kgs that were purchased, this is going to be -2 multiplied by 10,800 kgs of tallow that were purchased. So for every kg, there was a variance of 2 shillings. So this is going to give us a total of 21,600. Now, by the virtue that the actual price is bigger than the expected price, the actual price is more, meaning that this variance is adverse. This is unfavorable. Unfavorable or adverse, meaning that it is a negative variance. It is not good for the business because the actual price is more than the expected or the standard price. But for the caustic soda, the difference is of 1 shilling, and this is going to give us 13,200. So for every unit we bought at a lesser price of 1 shilling. We had estimated to buy at 16 shillings, we bought at 15 shillings. So it is a positive variance to us, it is a favorable variance. So we have to show whether it is favorable or unfavorable. And for the total, we can add the two. Remembering that this is negative variance or adverse variance or unfavorable, so it's negative and this is positive. When you add the two, the net effect is going to be 8,400 adverse or unfavorable. Some books write unfavorable, but it's the same thing. So that is what you're going to do for the material price variance. We have not finished the question. You're going to also to answer. What are we going to do for the material usage variance? And because I want to use this information that is here, allow me not to rub, and then maybe allow me to erase some part of it. So I want to rub the price variance, and I'm going to do the quantity variance in the same page. So we can do the quantity variance. So we are going to look at material usage variance. This is the second variance. So as we have said, all variances are simply a difference between the standard and the actual. So this is going to be standard material. But in bracket, we are going to say for the actual production. For actual production minus the actual quantity, actual material quantity holding price to be constant, holding price to be constant. So we are going to multiply by the standard price. So if the price did not change, how much of the variance resulted from the quantity that was used? So again, we are going to have our tallow here and our caustic soda. And then we are going to look now at the standard usage. So the standard usage was expected that for every carton is going to use 15 kgs for 1 carton. Every carton was going to use 10 kgs of caustic soda. 1 carton One carton was going to use 15 kgs of tallow and 10 kgs of caustic soda. Now, why did we write here for the actual production? Then you have to ask yourself, if 15 kgs were for one carton, how many cartons did we produce? In our case, we produced, in the month of October, we produced 1,200 cartons. So in the month of October, we are saying again, we produced 1,200 cartons. Then how much material are we expected to use? We were expected to use 15 kgs for every carton. And for the actual production, we are multiplying with the 1,200. So we were expected to use 10 kgs of caustic soda for one carton. So for 1,200 cartons, this is the expected usage. You multiply. So allow me to first of all get the answer up to this point. So 15, if you multiply 15 kgs times 1,200, you're going to get 18,000 kgs. That's how much you are expected to use. And when you multiply 10 kgs times 12, you're going to get 1,200 multiplied by 10, you get 12,000 kgs. That is how much of the materials we were expected to use according to the standard. But now compare that with the actual kgs that were actually used. For the actual, here we spent 10,800 kgs. That is how much was used. And for the caustic soda, we used 13,200 kgs. Now, this is where the variance is coming in. This is where the variance is coming in. So we can multiply this with the standard price, that is holding price to be constant. If price did not change, this was the original price or the standard. Holding the price to have been constant at 10 per kg or 16 per kg, the variance is given by, this is going to be given by 72,000. And the second one is going to be 19,200. For the negative variance here, we were expected to use 18,000 kgs. We have only used 10,800 kgs, meaning that this variance is favorable. We have spent less on materials. Then, remember this is shillings. This is shillings, so the ultimate answer is in shillings. So again, here we were expected to use 12,000 kgs. And we ended up using more. We used 13,200 kgs, resulting into a variance that is adverse or unfavorable. So again, you can add these two variances. Remember, this is favorable, this is unfavorable or negative. So this is positive, this is negative, and the net effect is going to be 52,800 adverse, favorable. The favorable is more than the adverse. And that is how you're going to get the material usage variance. But remember, the goal is to get the material cost variance. Material cost variance, which can be given by material price variance plus material usage variance. So the two variances that we have computed, this being one of them, and the one we have computed previously, the price variance, when you add the two of them, you're supposed to get the material cost variance. So the price variance we had gotten is 8,400. Before I rubbed, that's what we had, 8,400, it was adverse. And the usage variance we have computed here, we have gotten as 52,800 favorable. Once you add the negative, which is adverse, plus the positive, which is favorable, the net effect is 44,400 favorable. And that is one way where we can get the cost variance. This is the total material cost variance. This is one way that we can use to get this variance, which is the material cost variance. Alternatively, we can use the formula that we had in our notes, the original formula. So again, I'm going to rub this, then we can use the same formula because I want to use this information. So we are going to compute now the material cost variance using the formula material cost variance, material cost variance, where we say there is a formula where we can say actual production you multiply by the standard material cost per unit minus the actual material cost So in this formula, we are not going to do it per unit. Okay, we are not going to use it per raw material, but we are going to do in total. So in total, the actual production was 1,200 cartons of the household soap. And in terms of standard material, not price, keyword here is cost. When you look at the cost, what is expected is that you are going to use 15 kgs of tallow at shillings 10 per kg. So you'll end up using 150 shillings for tallow. That is the cost of tallow. Because you are going to use 15 kgs as per the standard, and each kg is going to cost 10 shillings. So at the end of the day, you are going to use 150 shillings on tallow. Then you are going to use 10 kgs of caustic soda, and each one of them is expected to cost 16 shillings. So you are going to end up using 160 shillings on caustic soda. Now, remember, here we are not talking about price but cost. Cost is a multiplication of both the kgs that you plan to use and the money that you plan to spend per kg. So looking at that, it means that the standard cost of material is 150 plus 160. So the standard material cost is going to be 310, which is the sum of the two. Then the actual material cost that was consumed is what you are given here. The actual material cost, you are told they spent 129,600 on caustic soda, on tallow, and 198,000 on caustic soda. So this is the total that they used. This is the total that you are expected to use, or what was budgeted or the standard. So at the end of this day, you are going to find that this is 372,000 minus 327,600. And the answer is going to be the same as you have seen previously. It is going to be 44,400 favorable. And that is an alternative way of getting the material cost variance. Alternatively, we have said you can add the material price variance plus the material usage variance. So you can also add these two to get this variance. Alternatively, you can use this method to be able to get the same variance. So basically, those are the basic material variances. The basic material variances. So look out for part 2, where I'll also be discussing the advanced material variances, like the material mix and the material yield variances. So if you found this video to be helpful, kindly like, share, and subscribe. Thank you.